Happy Wednesday out there, folks. This is Darius Dale here to present our macro minute for Wednesday, September 7th, 2022. Starting with asset markets, we have stocks down this morning, commodities mixed, crypto down, dollar up, global bond yields down, market moving headlines. So reminder, phase three equals tighter for longer, and don't you forget it. The Fed's tighter stance was reinforced by non-voter Thomas Barkin, Philadelphia Fed president. He told the Financial Times that rates at 4% on the Fed funds rate would not surprise them, and they must stay high until the bank is convinced inflation is subsiding. We'll hear more from Barkin later, as well as from voters Loretta Mester, Cleveland Fed president, and Lyle Brainerd, who's the Fed vice chair. Reminder, the global liquidity cycle downturn is ongoing. So not just the Fed, the rest of the world is all continuing to tighten monetary policy. I want to say, I think 80 plus, 90 plus central banks globally have tightened policy throughout the year to date, which is, I believe, is the highest share on record. The Bank of Canada is set to deliver a fourth outsized rate hike in a row, with consensus seeing a 75 basis point move to 3.25%. Investors will seek clues from Governor Tiff Macklem on whether another rate hike will come in October or if the tightening cycle is near an end. Chile's central bank surprised with an increase of 100 basis points to 10.75% yesterday, but it signaled the end to its hiking cycle is near. And then shifting gears globally, so no seven handle for you. We're talking about the USD CNY rate, the Chinese yuan. China sent its most powerful signal yet on its discomfort with the yuan's weakness by setting its reference rate for the currency with the strongest bias on record. The PBOC set it 454 pips, which is a 1/100th of a move relative to big figure moves, more than its consensus. More than the market implied consensus for an 11th day in a row of stronger than expected fixing. So as we all know, the Chinese yuan has been on a slide in recent months, and that slide just based on because we import obviously the larger share of our imports come from China, has contributed to some import price deflation in recent months, and obviously contributed to disinflation from a reported basis on both CPI and PPI. We're now getting to this sort of vaunted level of 7 when you look at the USD CNY rate. That's historically been a sort of a resistance level because the Chinese authorities have shown that they don't want it to get much stronger or much weaker than that from a Chinese yuan perspective, or they don't want the dollar to get much stronger than that. So we may start to see some of this disinflation that's been very positive for both real economic growth, relative to June in the months of July and August, and also obviously positive for the markets, off the July lows, particularly for most risk assets. If that disinflation process starts to culminate because the Chinese authorities are pushing back, they're going to have to look elsewhere for sources of disinflation. And that means looking internally at the labor market, et cetera, and more slowing therein. Big movers this morning. Bloomberg Industrial Metals Index down 1% to down 6% month over month. WTI crude oil off 2% to minus 3% month over month. We saw some pretty ratty import statistics in Chinese trade data. Chinese imports slowed to a 3 or 4 month low, 4-month low of 0.3% year over year. Chinese crude oil imports, they look at it on a year to date basis, down 5% year over year. So clearly zero COVID is having a significant shock to the downside, shifting a negative shock to global import or global energy demand, particularly crude oil. And then lastly, Ethereum merge ain't working, minus 3% to down 11% month over month. Anyway, getting to the risk management, our volatility adjusted momentum signals in probable ranges. US dollar index, that's bullish FAMs, that's overbought this morning. Gold bearish FAMs, not quite oversold yet, about 1% of downside or 3% of upside. Bullish FAMs, 10-year treasury yield, that's overbought. Bullish FAMs, credit spreads in the middle of their range. S&P 500 neutral FAMs, that's still oversold. VIX bearish FAMs, that's overbought. NASDAQ 100 neutral FAMs, that's oversold. Russell 2000 breaking to neutral FAMs, that's oversold there. Bitcoin bearish FAMs, you got about 3% of downside, 11% of upside. Ethereum bearish FAMs, middle of the range there. Shanghai Composite neutral FAMs in the middle of the range. WTI crude oil bearish FAMs in the middle of the range. Agriculture bearish FAMs, you got about 2% of upside versus 5% of downside. And then lastly, industrial metals bearish FAMs, oversold. So with that, Darius Dale presenting our macro minute for Wednesday, September 7th, 2022. Best of luck out there today. Cheers.